Welcome to the 2023 Economic Depression and Preparation Channel. I'm your host, Tony. Thank you for joining me on this Wednesday edition, Hump Day Wednesday, October 25th, 2023. Briefly, we're going to be talking about the strikes, the labor strikes, also the Federal Reserve and the European Central Bank also looking at raising rates, as well as the changes that are going to be happening in this economy, that it's going to be happening in the last fourth quarter. I told you as we head into the fourth quarter, things were going to be slowing down as companies and businesses reevaluate profit statements in line of the rising input costs and production costs in America and in Europe and elsewhere in the world, Asia as well. So on to that, please be sure to subscribe to this channel. Preach to me for the latest interpretation of financial news. We're not financial advisors, but we do interpret financial news as it becomes available. So, courtesy of Reuters.com, here we go, guys. U.S. auto sales likely to rise in October, but impact of the UAW strike looms. As you know, UAW, United Auto Workers Union, they just ended up, some companies, GM, Ford, and the conglomerates ended up firing some people yesterday. I saw in the news. Some 5,000 workers were laid off as a result of these looming strikes that are continuing. Now, we know auto sales are eventually going to be coming down because interest rates are going up, and typically that means slowing down the buying and purchasing of these cars. And plus, they're trying to push, as you know, majority of Americans to these EV or electric hybrid vehicles, and they're giving a lot of subsidies in states like California and Texas and all of these other states. But, you know, there's going to be a transition. As we know, our infrastructure can't support, our electric grid can't support EVs for everybody to have an EV full time. And they're working on that. I just saw that President Biden issued $3.5 billion infrastructure plan to upgrade the quote-unquote upgrade the power grid. Unfortunately, that's going to be a little bit too little too late. As you know, other countries' infrastructure is surpassing the United States by far. So anyway, but the auto sales here are going to rise this month, according to the media and the Reuters Outlook and AP, but it's going to be going down. As you know, that on the surface, things look good as far as the sales, but numbers are going to be numbers do have an opportunity to come down here because there's still pressure, vehicle affordability concerns among Americans, potential economic slowdown as we're experiencing now. Now, guys, ladies and gentlemen, one thing I do want to point out is that even though, you know, we're all going into a slowdown, we won't be getting into the depressionary inflation numbers, hyperinflation numbers, until after the credit market collapses and after the housing market collapses. That's when we're going to see real trouble, because that means the banks are going to be consolidating, and then they're going to be, you know, a lot of banks are going to be ended up folding under and merging with the big five, JP Morgan, you know, Bank of America, Citi, and all those type of things, Wells Fargo. Once that happens, then you know that it's time, we're in a severe recession, and that's when the media will start reporting on it. And by that time, most of you know that we should all be prepared by then. Now, the European Central Bank, the ECB, according to MarketWatch.com, they're pausing as the economy sputters. So now we have a dichotomy here. Before, all of the central banks are raising rates in tandem from Asia to Europe to United States to the developing countries. Now the ECB, European Central Bank, has the president of ECB, Ms. Christine Lagarde. She is pausing the rates because she said on Thursday that inflation cools, but activity stagnates. So they have stagflation going on here in Europe and the ECB. Decision will be delivered in Athens, Greece. It makes one rate decision per year outside of its Frankfurt, Germany headquarters. So it's going to make this rate decision here. The European economy is sputtering, quote unquote, according to this article. The last reading of the Eurozone manufacturing PMI was 43. Anything below 50 is deteriorating conditions, as you know. And so manufacturing has decreased in Europe. Production has decreased. And the economy is stagnating. Even though inflation has come down to 4.3%, okay, up from 5.2, very much like the United States numbers of inflation, official numbers. Now, we know the unofficial inflation is at 12 to 15% for the majority of us, according to ShadowStats.com. But the official numbers that the Labor Department gives us for European numbers is at 4.3%. But with oil prices looking to go up, and we know we have this, quote unquote, this war going on in the Middle East and other parts, in Ukraine, and possibly a third conflict going on, oil prices are definitely going to be high throughout the remainder of this year and possibly even through the remainder of next year, guys. So that's something to look at too. All these uncertainties, so they're going to be in the pausing while the United States Federal Reserve here, look at contrast here. Fed's Raphael Bostic, he's the Fed president for the chairman of the Atlanta Fed Board. There's 12 Fed chairman presidents in addition to chairman, who overall Jerome Powell makes a decision. But he said on Friday he doesn't envision interest rate cuts happening into 2024. So not at the beginning of 2024. They're talking about late 2024, like right now, like November 2024 or December 2024. They're going to have to be cautious, quote. He says, we're going to have to be patient, but we're going to have to be resolute. So they're still looking to raise rates above the 5.2% it is at now. So we still have one more Federal Reserve meeting coming up in December, and they're going to raise the rate again, ladies and gentlemen, and they're going to continue to raise the rate in 2024. And that's why it's so important for all of us to get prepared as best we can, mentally, physically, spiritually, and emotionally, because we're not going to have all the tools and resources at our disposal as they begin to raise these rates. Now, the Fed has raised the borrowing rate 11 times since March 2022 for a total, as I just said, of 5.25% on the Fed funds rate percentage points. So he doesn't see him easing anytime soon. He has been explicit in the stating that rates have had a significantly restrictive level where they don't need to be raised anymore. But the problem is inflation is here to stay. It's entrenched in the economy, and we don't want to go down the road of a stagflation like they did in the 1970s, but that could possibly happen. So they're going to continue to raise, as he was on Squawk Box this morning telling us that they're going to raise these rates. I don't see it coming down either. And so these rates are going to be raised continually throughout next year, and whatever breaks. It could be the money market, it could be the stock market, but I anticipate the stock market not breaking because of these wars and everything that's going on. We could have a melt up. Remember, Venezuela, Greece, Zimbabwe, Turkey, Lebanon, Iceland, all these economies that collapsed years past, they had a melt up. That means the stock market was melting up, money was melting up. This is exactly what we're going to experience here. But the United States is going to be the last domino to fall. So unfortunately for our friends in Europe, you guys are going to get the severe recession first. In Asia, they're going to get the severe recession. But Asia is going to be the first to recover, like in China and Singapore and those other developing countries, because they have the resources, they have the manpower, and they have the resolve, because they weren't living high off of credit and high off the world reserve currency that the United States has. And so they're going to be the first to recover. But this is going to be the dominoes that are going to be falling right now. This is not counting the unfunded liabilities that we have in this economy. We have over 200 trillion unfunded liabilities, $34 trillion in debt now, the national debt. And everybody says the debt doesn't matter. Yes, it does matter, because if we can't pay the interest on the debt, that means the government's basically insolvent, and eventually it's going to catch up to us, and it's going to raise the prices of things for everybody, which is already doing now. Price of housing, the price of cars, the price of schooling, the price of taxes, everything is going to go up because they have to make up for the shortfall. And so printing money only works for a certain time, because like Alan Greenspan said, the former Fed chairman, a long time ago, he said that we can print money, but we can't guarantee the purchasing power of it. And once Americans' purchasing power goes down, then that means the standard of living goes down. You and I standard of living goes down. And I just don't know how this current generation of Americans are going to be able to take that. Not the baby boomers, not the silent generation, not the Gen Xers. Maybe not some of the millennials, but some of these current generation, the Generation Z and Y and Alpha, I don't know how they're going to be able to take that, a lower standard of living. That means crime is going to go up. And when crime goes up, you already knows what happened. The cities are going to become jungles like Chicago, Detroit, LA, Baltimore, Miami. All these cities are going to become jungles, literally, as people fight over resources. And remember, ladies and gentlemen, this is what this is all about. At the end of the day, it's about two things: your resources and your conscience. Who are you going to spiritually? Who are you going to? Are you going to come out of Babylon, come out of these cities, there's wickedness and around, and you're going to come to the more simple life in the rural and grow your own food and learn how to be self-sufficient? Or are you going to continue to expect Babylon to or this kind of thing that represents the metaphor for wickedness and evil, whether it's financial or mental or social or emotionally, to control your life and to control your finances? So think about that this week as we head into the end of this month almost, and be blessed today, and hope I wish you a productive day wherever you are in this world, and I'll talk to you very soon. Thank you for listening. Thank you for subscribing. I'll see you very soon.